Hi everyone, it's Jeff Underwood and The Ugly Truth About Money, and today I'm going to talk about loan officers and how they are being blamed for this entire housing mess. And here's why, and this is what's got me a little upset about how the Federal Reserve, which is not part of the government, and the federal government itself are pointing the finger at loan officers, mortgage companies. And what they're doing is they're basically putting the blame over here on the people that had these products to sell, mortgage products to sell. However, these products were not put together by the mortgage companies. They were put together by Wall Street. Wall Street came up with these really aggressive financing products, these CDOs and the mortgage-backed securities to sell these things to Iceland and other countries that have really been hit hard financially by this whole mess. And Wall Street really is the one that's to blame for these products being introduced to the mortgage companies in the first place. But again, the Federal Reserve has put together a proposal that will really completely overhaul how a loan officer gets paid, and it goes into effect, as of right now, it goes into effect April 1st of 2011, and to where loan officers will be limited on what they can make. So they're stepping in saying it's okay for you to still get paid, it's just you're going to be limited on how you can get paid and what parameters are in place for you to get paid. So, and now the federal government has also put into place licensing requirements. So if you think about it, here's what's happened. About 60 to 70% of the people that were in the mortgage business or loan officers have been eliminated already because of the licensing requirements and the background checks and everything that goes into place with that. And just the stress level, a lot of people have bailed from the industry. So a lot of the people that were doing things incorrectly have already left the industry. But then the government comes in and puts together these parameters, these guidelines that you have to be licensed now. So you have to take these classes. You have to take 2 exams, a federal exam, a state exam. You have to pass them at a certain percentage of passing. And then you have continuing education after that. Background check, credit check, everything that goes into it. However, if you work for one of the big FDIC depository banks like Bank of America, Wells Fargo, Chase, the big banks, you do not have to be licensed as a loan officer. You just have to be registered through the bank. So they're telling us we need to clean up the industry. We're going to have to put these tougher parameters in place, but the big banks are not being held to the same standards. It's just going to be the small mortgage brokers and mortgage bankers. So it's just something that bothers me when I see the government stepping in to make changes to somebody's compensation, pointing the finger at them, saying that they're the ones behind this whole mess, when in all actuality, the products that were made to sell were made by Wall Street. Anyway, I just wanted to get that off my chest. I hope you all have a great day, and I will talk to you very soon. Take care.